Hello everyone, welcome back to my class. The topic of discussion was unit number 1 of your accountancy paper, accounting for not-for-profit organizations. As you all know, these organizations work for the betterment of the society and their objective is not-for-profit. Okay, so this kind of organizations, as you all know, prepare 3 types of account: receipts and payment account, income and expenditure account, and a balance sheet. Today the topic of discussion is how to prepare income and expenditure account. We have already done a sum on it. Now we are going to do the second one from how to prepare income and expenditure account from receipts and payment account. And along with it, today we'll also learn how to present the balance sheet for a not-for-profit organization. The concept of balance sheet is the same for both profit and non-profit organization. Except for the term capital, here for not-profit organization we use the term, instead of capital fund. The concept is same. As you all know, asset is always equal to capital plus liability. And so how do you find out capital? It's assets minus your liability. The same logic will apply here. Only thing is we use the term capital fund. And what is a balance sheet? It is a statement which shows the financial position of an organization on a particular date. So if the date changes, the position may change, but but that is why we write as on or as at on the top. Balance sheet for other accounts we write for the year ended, but for a balance sheet what we write, children? Because it shows the financial position on a particular date, we write balance sheet as on or as at. Okay, so let's see what your problem is all about. Let me read out the question for you once. A summary of receipts and payment account of ABC Sporting Club is given below for 1 year. This is a receipts and payment account. It's for the year ended 31st December 2020. So what is your financial year? Since the ending is 31st December, your financial year considered will be 1st of Jan to 31st of December. So to opening balance 2,500, to subscription 20,000, to donation 6,000, to tournament fund 20,000, to entrance fees 1,500, to interest on fixed deposit 500, to charity show receipts 2,400, to sale of all sports material costing, that is there was a material sold which was actual price was 2,200, but it was sold for 2,500. So there was been a profit on sale. And what are the sources of payments for this particular financial year? It was salaries 3,000, by electricity 300, by tournament expenses 21,000, by sports equipment purchase 11,200, by furniture 5,000, by miscellaneous expenses 700, by charity show expenses 2,000, by investment 8,000, by closing balance 4,200. Please, closing balance you can take it as cash or bank. Now, along with this, we have certain additional information. What are those? Of the total subscription received, rupees 500 is for 2019. This means it's for the previous year. And rupees 600 for 2021, which means it is for the future year. But rupees 100 is due for 2020. So for current year also there has been an outstanding. So it is 100. Second additional information, the total sum received as entrance fees is to be transferred to capital fund. That means this entrance fees which was received is to be capitalized. It is to be shown in the balance sheet. Now next, salary remaining due to be paid. That is, there has been outstanding salary of rupees 300 which is to be adjusted. Fourth, we have interest. There is an accrued income, that is accrued interest is still receivable, rupees 500. We had interest on fixed deposit. There is another information. The club had the following assets on the opening date of the financial year, that is at the beginning of the financial year. What was it? Sports equipment rupees 3,000, furniture rupees 2,000, investment account rupees 6,000. Now from these informations we have to prepare our income and expenditure account and a balance sheet. And why these opening balances is given to you, we'll come to know as we keep on solving the sum. So first we'll prepare the income and expenditure account. Okay, now how do we prepare it from receipts and payment account? Let's discuss. Now, the first rule is when we prepare our income and expenditure account from receipts and payment, we have to ignore the opening and closing balance. So this is denoted by the yellow color. To opening balance 2,500, to apply closing balance. This is to be opening and closing balance is to be ignored. Now, your receipts and payment account is similar to your cash book. So whatever, irrespective of the nature of the receipt or payment, irrespective of the time of receipt and payment, whether it's relating to future year, current, that is previous year, it's just we write all information in this, but this cannot be done so income and expenditure account. So first was opening balance is to any capital item is to be avoided, because income and expenditure shows only revenue item. So what are the capital items here? I have denoted it by the light blue color. We have sport equipment that has been purchased, so it is 11,000. By furniture, 5,000 has been purchased, that has to be saved a capital item. And another item we have is by investment. Yes, these are all assets, and these are not to be shown in your so this is denoted by the capital item are to be ignored. Next, this, if you remember your adjustment number 2, it says the entrance fees is to be transferred to the capital fund. So this we cannot show it. So this is transferred to your directly your balance. It not be shown in your income and expenditure account. Now, but after that, let's see the items one by one. Let's see on the receipt side first. What is our first source of receipt? If subscription. Subscription received was 20,000. Yes, but you had certain adjustment number A. Yes, so I've said we had certain information which is to be added once and some information which are to be deducted. Now let's see what is that. Number 1 says of the total subscription received. And now remember here another rule of income and expenditure account, we only consider those informations or those income and expenditure relating to the current year. Now of these 20,000, if you remember the subscription receipt, what does it say? It includes for the previous year 2019 500, again rupees 600 for the future year. So these are to be deducted. So this is deducted. Phase 500 which is for previous year, 600 which is future year is to be deducted. And for the current year there has been outstanding of rupees 100. So that is to be added. Okay. That is why I have written plus minus adjustments of subscription. Next we have donation. So since it's not a specific donation, if it's a specific donation, had it been a specific donation, we would not be shown in income, but not a specific donation. So we consider it in the income and expenditure account. Next, to tournament fund. Now if you see here on the payment side is a tournament expenses, you can adjust it right out here. So tournament fund was 20,000 where expenses was 21,000. So what happened, there has been a 1,000 more expenditure which will go out of the company, so of the organization, sorry, as per expenses. So 1,000 will be shown in the expenditure side. Okay, there was more expenses than the fund, so this will be have to be deducted from the current year. Next, interest fees has been already discussed. Next, we have interest on fixed deposit. Now, there was an adjustment, additional information that number D, that interest is receivable 500. Interest is receivable. That is to be added. So, interest adjustment 500. To charity show receives. Yes, so that will be shown in the income 2,400. To sale of, actually it's a sale of, not shown, but the profit is considered. Or had been a loss also we'd have shown. This is 2,500 where the cost at that after depreciation everything was 2,200. Yes, so there has been a profit. If you follow this green path, I have shown the calculation. Profit on sale 25,000 minus 2,200, 300. This is shown on your income side. There has been a profit on sale of item is shown on your profit. Now let's discuss your payment item before we write up the income and expense. By salaries 3,000, that will obviously go to the expenditure side. There has been an adjustment with salaries at number C, which says salary is remaining due to be paid rupees 600. So salary is still to be paid is rupees 300. Yes, so that is to be added. It's outstanding, so this is to be added to this 3,000. Now there has been electricity expenses of 300. Tournament expense had already been done. These light blue items has already been discussed. By miscellaneous expenses 700 is to be shown. By charity expenses 2000, that is also to be shown on your expenditure side. Now with these items, let's prepare an income and expenditure account. It's a nominal account, so we debit all expenses and losses and credit all incomes and gains. So income is on your credit side, expenditure is on your debit side. Let's start with the income side first. If you for income, we'll get your information from receipts. So what we had, first item is to subscription 20,000. Yes, so subscription is 20,000. There was an outstanding for the current year is 100. It includes anything received for the previous year 500, for the future year 600, that are to be deducted. After this addition and deduction, we have income from subscription is 19,000. We consider donation. If you remember, there was a donation of 6,000 rupees. Because it is non-specific, it is shown here. By interest on fixed deposit was 500. We had an outstanding from your adjustments, so that is to be added 1,000. By charity receipts, we have 2,400. And if you remember, there was a sport material sale which was worth rupees 2,200, but it was sold for 2,500. That is 300 is your profit. Now coming to your expenditure side, where do we get this information from? We get it from your payment side. So by salaries, and I'm taking two items, by salaries and by electricity. Salary had an adjustment, if you remember. So salary had an adjustment outstanding 3,000 plus 300, 3,300. Electricity is 300. Tournament expenses, if you remember the calculation, there was a fund of 20,000, by expenses was 2,100. So we show 1,000 in your expenditure side. Okay. Now miscellaneous expenses 700, charity show expense 2,000. I'm taking it together, if you remember, children. So tournament expenses is this, miscellaneous expenses 700, charity show expenses is 200. Okay, so after the adjustments, after we find that income side is higher than expenditure side, so we have a surplus. Now how much is the surplus? 21,400. Yes. Now children, we are after this is okay. Now this fund, this 21,400 will be transferred to your capital fund. Okay, it's transferred to your, it's added to your capital actually. Now here is, if you remember your question, we don't have any information regarding your balance sheet. What is your capital fund? We don't have any kind of information. If you see, this is the receipts and payment here also. But the clue given to you is this. They have given the opening balances, which means we can calculate the capital at the beginning of the year. So what is capital? It is assets minus your liabilities. Now if you see your items here, all are on your sports equipment is an asset, furniture is an asset, investment is an asset. So everything in there, no information on your liability side. So with this information, we'll prepare the opening balance sheet. From the these are from the investments from your asset side, and if you remember from your receipts and payment account, it is 2,000. If you remember, your opening balance was 2,500, so that will be shown in your opening balance sheet. Another information that you have, if you remember your adjustments, this 500 rupees was received during the year. It is related, so it was outstanding at the beginning of the year. This is a hidden adjustment. Whenever any amount relating to the previous year is received during the current year, it means it was outstanding at the beginning of the year. So that is shown. Any amount, any amount receivable, any income receivable is always an asset. So this is shown in the 500. So this 2,500 is the balance. You can take it this as a bank, because the receipts and payment account is silent as regards whether it's cash and bank. Anything you can take as bank also. So opening balance is taken. Any amount relating to previous year received during means it indicates that it was outstanding at the beginning of the year. So any income outstanding is always a asset. So this, we don't have nothing with liabilities, so your asset minus 0 it will be, so 14,000 is your capital fund. Okay children, so this is how you calculate your capital fund. This is, so after this we prepare the normal balance sheet. Now where did we get this information? 4,200 is the closing balance of your receipts and payment account. As it's a closing balance sheet, so closing balance is considered. And if you remember, our subscription outstanding was 100 at the beginning of the current, at the end of the current year. So any income received is an asset. So this is shown. Again, interest on fixed deposit. If you remember, adjustment number D, it was outstanding at the end of the current year. So 500 is taken here. Now, if you remember your opening balances, investment was 6,000, sports equipment was 3,000, and furniture was 2,000. So that is taken. See, investment is 6,000, sports equipment is 3,000, furniture is 2,000. Now, if you see from the receipts and payments account, if you see from the receipts and payment account, sports equipment purchase was 11,200, furniture was 5,000, and investment was 8,000. So this was purchased, that is to be added to your opening balances, sorry. So investment was 8,000, that is added. Sports equipment purchase was 11,200. Now remember, your children, you had a profit of 300. What was it? That all worth rupees 2,200 was sold. So that is to be deducted. Anything sold out is to be deducted. So sports equipment, there was a purchase. From receipts and payment account, we got the information, and from adjustment we said so amount value of sports equipment at present with the organization is 12,000. Furniture, as you all know, 2,000 was the opening balance. There was a purchase of 5,000, so 7,000 is your present value of all the total furniture at present. Now, for 2020-21, you had received the subscription. So pre-received subscription is always a liability. Salary outstanding was 300. That is also a liability, is shown here. Now capital fund is 14,000 we got from the opening balance. Yes, this 21,400 is a surplus as indicated by your income and expenditure account. And if you remember your adjustment number B, entrance fees was to be transferred to capital fund. So this is added to your capital fund. So once we add up all this, we get 36,900. So on 31st December 2020, the financial position was as such for the organization, non-profit, not-for-profit organization. Okay, so this is the status. I hope, children, you have understood how do we prepare it and from a receiver, how do you prepare a balance sheet. Okay, I hope I could make it clear. If you find trouble, I would advise you to watch the video over and over again so that I'm trying my best to make it clear. If still you have a doubt, you have a confusion, you can obviously text me or message me or make a phone call to me. I'm only a phone call away from you. Okay, children, any doubts, any queries, you can all clear with me. Thank you so much for listening patiently to my explanation to my video. Okay, hope to see you soon. Okay, stay healthy, stay safe. Thank you.